Ladies and gentlemen, good day and welcome to Q1 FY24 earnings conference call of Archean Chemical Industries Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ranjit Pendurthi, Managing Director of Archean Chemical Industries Limited. Thank you, and over to you, sir.
Thank you. Good morning, ladies and gentlemen. We wish you all a warm welcome to our Q1 FY24 earnings call. Today I am accompanied by our CFO, Mr. Raghunathan, and Mr. Rajiv Kumar, DGM Finance, and SGA, our Investor Relations Advisor. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchange and on our company website as well. I will give you all a quick snapshot on the industry and recent developments of the company. Post that, Mr. Raghunathan, our CFO, will walk you through the operational and financial performance data of the company. So to start with, the industry highlights. The quarter gone by has been a fairly challenging period for the entire chemical industry, as you all may be well aware. There are headwinds across the chemical sector as large amounts of destocking is happening across the board, across geographies as well, and in the overseas market specifically. Just like any other product, bromine and bromine derivative products are not an exception to these challenges. Global players are liquidating their inventory across sectors, and the inventory levels have been coming down. So we believe that there will be some green shoots in the coming period and the current trend will reverse. Some industry may take more time to recoup as overall consumption of China, which is a large consumer of many chemicals as well as an exporter of end products, is also slower than expected, and same is witnessed in the business performance of many of our domestic manufacturers. Most of the manufacturers are reassessing their market strategy and cost structure due to this uncertainty, and so are we as a company. Nevertheless, despite this global turbulency with all the other geopolitical issues going on, India is still doing very well and incurring significant capex for long-term growth opportunity, and we believe that that is a strategy that suits us best as well. It is worthy to note that the demand from domestic market has remained firm despite pricing pressure, and we believe that this will continue as we go forward. Coming to our company performance, we are glad to inform you that the company was able to report a healthy performance for the quarter, registering a total revenue of rupees 3,543 million for Q1 FY24. We did see some moderation in business due to gradual pickup from global customers and also due to the cyclone in June, as you're aware in Gujarat. Our plant was shut for a few days in order to protect our employees and assets. We resumed our operations within a week's time and normalized the operation in phases. The team at the facilities performed a great job in normalizing the situation in quick time. I would like to acknowledge and thank the entire team and staff at our company for their grit and commitment. Coming to the segment-wise performance, on bromine specifically, the revenue contribution from bromine in Q1 FY24 was about 40% at rupees 1,331 million. Realization of bromine has been trending down for the last couple of quarters, led by overall destocking, which I mentioned a few minutes ago, which we have also highlighted in our earlier call. Demand, however, from domestic clients continues to be firm despite pricing pressure. Purity in bromine is very important, and very limited players like us are meeting the global demand at the specification level. We are seeing some green shoots as many customers have liquidated a large part of their inventory and the export market is picking up again. We expect a steady business in the coming quarters. Moving on to the industrial salt segment. Industrial salt contributed nearly 59% to our top line during Q1 FY24 with a revenue of 1,983 million. Demand for this business is primarily driven by chlorine in the Asian market. So many players have expanded their production and expanded their chlorine usage and its downstream product capacities. Hence, the demand continues to remain robust and we do not see a challenge to this. Coming to the pricing aspect, since more than half our industrial salt business is on long-term contract basis, volatility in the spot doesn't get echoed on our business performance. We also have ongoing contracts with few customers as well and also expanding the client base by adding new customers. We are maintaining the quarterly volume run rate of 1 million tons and expect the same momentum to continue in the coming period. On sulfate of potash segment, this continues to be an important business for us. This product has its own gestation period before it fully picks up. We have started seeing some traction from few clients and also the domestic market is being aggressively marketed to and believe that the volumes will pick up domestically as well. And we expect to stabilize this in the current financial year. That's it from my side. I would request our CFO, Mr. Raghunathan Rajagopalan, to run through the financial performance.
Thank you, sir. And a very good morning to all the participants on the call. We are pleased to report a reasonable performance for this quarter. To give a summary of Q1 of FY24, the company registered a total revenue of rupees 3,543 million. Of course, we could see a drop of 13% on a year-on-year basis. As highlighted by MD, the drop is predominantly due to headwinds across the chemical industry on the demand front. Export market contributed around 66% and the remaining 34% came from the domestic market. Coming to the business mix, bromine contributed 40% of the total revenue and the industrial salt 59% and the balance from SOP. Moving on to the sales volume, around 4,273 metric tons of bromine was sold in this quarter against 5,729 in the same quarter in the previous year. And in the industrial salt, the sales volume was around 1.06 million tons. EBITDA for the company stood at rupees 1,460 million and EBITDA margin stood at 41%. Various operational efficiency measures that were taken have increased the output, coupled with lowering of the input cost, transportation and power and fuel have really supported us to hold on to this margin of 41%. Net profit after tax for the quarter stood at around rupees 942 million, a growth of 11% on a year-on-year basis. With this, we conclude the speech and open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Sudarshan Padmanabhan from JM Financial PMS. Please go ahead.
Thank you for taking my question. So my question is going a little deeper on your comment on the bromine market. When I'm looking at the second half specifically of July and more so in August, we are noticing that the bromine prices in China has improved, and primarily because of the reasons that you mentioned. In that context, I am trying to understand, one, the demand from export and long-term contracts. Given that the prices were volatile, my assumption would be that clients would be wary, to come and discuss on longer-term contracts. But with that, is the worst over and do you start seeing some kind of a demand coming in from the export client as well on the bromine?
So thank you for the question. I think some of your observations are correct. We do see the demand picking up overseas, although it's not the speed that we expect, but we are happy that it's coming back. So some of the clients who've been sitting on the sidelines, I think they are re-engaging to pick up the contracted volumes again. And we think, which is why we feel that in the coming quarters, some of this demand would come back. The overall market, of course, continues to be healthy. I think it is not a question of is bromine required or not. It is required. It will continue to be required for various derivatives on the agrochemical side, pharma side, and various other end users. So I think largely with the theme in the chemical sector of destocking happening, I think we believe that some of these customers will come back.
Sure, sir. And in the context of, the derivatives as well, since new capacity coming in the fourth quarter, I mean, do you think that, primarily as we start negotiating even for the derivatives, more or less things will become more rationalized and normalized, and probably we should have a good platform to start selling the derivatives as and when the capacity comes on stream?
Yes, I believe our strength will get more solid as we become a fully integrated player, which is why I think our capex into the bromine derivative project continues. And I think that the real strength will come on board when we commission this in the coming quarters. And the engagement on the derivative side also remains strong. We have started marketing to some customers about the potential products that we will start making, and I think the feedback is very good.
Sir, on the cost side, I mean, you did talk about some of the players starting to reassess the cost, and we are also looking at it. Can you give a little bit more color? I understand that partially you would have benefited in the quarter by lower power and transportation. Should we see more benefits, going forward on that context? And also quickly on, the SOP. I mean, when should we see the liquidation of the 8,800 tons that we had, created?
So I'll start with the second question first. I think the liquidation has already started. And like I said, the domestic market, interestingly, has been a good surprise for us. We are moving consistent volume month on month and increasing our local sales. And also the consignment for the exports also have started as we speak. So the entire quantity should be liquidated within this year very comfortably. Coming to your first question on the cost rationalization and optimization, I'll ask Mr. Raghunathan to shed some light on that.
As we have mentioned in our speech, we have done some rationale in our cost, about some cost reduction measures. And we could see that in the overall on an aggregate basis, on raw material, transportation, as well as on power and fuel, we could see a savings of close to around 14 to 15 crores in this quarter. And we could see that this trend will continue. And we still see that there are a lot of opportunities in bringing down the cost going forward.
Sure, sir. Thanks a lot. I'll join that.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good morning, Ranjit. Thanks for taking my question. I got a couple of them. First, on the salt side, can I get the volumes of all the three segments by sales for this quarter?
Yes, Sanjesh, morning. And if you look at the sales quantity for Q1, bromine is 4,272 metric tons.
4,272.
Yep. The sales quantity, and the salt is on 1.06 million.
Okay.
And SOP that we have sold is around 380 tons.
382 tons. And what is the numbers for the preceding quarter last year, for the same quarter? Preceding year, sorry.
On bromine, it is 5,730.
Okay.
Salt is 0.96 and
Okay.
SOP is
SOP is 0.
65.
Sorry?
65.
65. Okay. Okay. I got it. Just looking at the bromine realization for this quarter was close to 320. How do you see these prices for us in, say, for this year and next year? Do you see there's an opportunity for the prices to harden from here, or you think the prices can remain stable at these levels? I have another question related to bromine. Construction is a very large part of flame retardant in China and other part of the world. And construction seems to be a sector which is facing a lot of headwind in China. In this context, do you still believe that a full recovery in the bromine demand is possible for this year? These are my first questions. Thank you.
Thank you, Sanjesh. I think the first question on price, I think in the last few months, we have seen a bottom on the price. And I think on the recovery front, well, it's a bit unclear on how much the price will recover. But I think what we are happy to see is that the demand remains firm. And thereby, like I mentioned in the introduction, we are seeing some of the Chinese customers come back on the buying side. So we think that will continue. On the second question that you had on the construction industry sector itself in China, yes, I think they are going through a fair bit of churn and a downturn. However, I think all reports that we read and the news that we are getting from some of the customers, I think the government is planning to step in a large way and support these infrastructure projects, etc., which I think the Chinese government has traditionally done. When required, they've stepped in to support the market. And I think real estate is a very crucial market for them. So construction, we believe, will pick up. The timing of which remains a bit uncertain. But nevertheless, I think our customers are not necessarily only on derivatives that are focused on the construction aspect. I think a lot of them have in other places as well, auto, electronics, textiles, etc. So the advantage being a diversified market for the derivatives, I think, is a good thing.
Fair enough. Second, again, on the bromine derivative side, do you think a sluggish demand, your ramp-up in derivative will be slower than anticipated, or you think once we start producing and we have a contract to supply at least a flame retardant to a existing buyer, the ramp-up will not be a problem, at least on the flame retardant side?
I think if you may recall, we are doing our downstream project in two phases. So phase one does not involve flame retardants. That's phase two. So the phase one is brominated clear brine fluids, PTA synthesis catalyst, etc. So there, I think we've started some groundwork on the marketing side. And as I said, we're getting very good feedback on people wanting to either buy on a tie-up or on a long-term basis. So that endeavor will continue. On the flame retardants itself, I think the fact that we will be an integrated producer, I think that gives us a lot of competitive strength and edge, most importantly. So I think the pricing itself would be of some concern, but I think in terms of being able to sell what we make as and when the plant is up and ready, I think we don't see too much of a challenge at this point.
Got it. Just a clarification there. We said that the entire plant will be operational by end of this fiscal year. That also include phase two, or you think phase two could slip to FY25?
No, I think the plant itself will be ready. I think the commissioning itself, we will do it in two phases. So the second phase will be the flame retardant. So that one we will probably do it in the first quarter of next financial year.
Got it. And in the presentation, I can see the pictures of the R&D setup. It's operational, or it's just the building has come up? And if can you help us understand what's happening on the R&D side for us?
Sure. I think the initial setup of R&D is ready. So I think the trials for the end products are already going on.
Okay.
And we probably will start sending out some samples, in post Diwali.
Got it. And what is the strength of R&D right now for us? And are this restricted to the product we are starting initially? And what are the plans for the R&D in FY25?
I think R&D at the moment is a 4-member team, and we are beefing that up as we go along. And I think by FY25, again, if you may recall earlier conversations, I think we plan to have up to a 10-member team for the R&D, specifically with industry application in.
Got it. The second question is on the salt. We were looking to add another 2 conveyor or washeries. Are they in the progress, and when can we expect that to be commissioned?
Well, we are still targeting to as we discussed or mentioned on the calls earlier before March 24. But give or take, this may be a month, simply because I think the ground remains wet from all the excess rain Gujarat has had across the state. I think there's been a 60% excess rain this year. So I think we need, some amount of dry weather to come continuously to start the piling, etc. But as such, the drawings and engineering, everything is ready. So once we start the work, we wouldn't take too much time. It's something we're very familiar with.
Do you think there could be a risk to the salt volume, considering that the caustic and soda ash prices are now significantly corrected? If you look at the results of the peer, hardly anybody is making any money in the caustic right now. Can this be a challenge for an offtake in the salt volumes?
At the moment, we're not seeing it because I think, given that all of you have a lot of expertise in this area, I think the export market works a little bit differently. As you may be aware, they're primarily chlorine-driven end users, not caustic-driven, unlike, the domestic market here. So I think the chlorine side, I think things are still a bit healthy because it's just not about only PVC as a chain, but there's a lot of other end chlorine derivatives that a lot of companies make. So I think at the moment we're not seeing any let up in the shipments or the contracted volumes.
Got it. My last question is on the SOP. What is the expectation for KTMS harvest this year? And so that conversion of SOP, how do you see that happening for this year?
I think our engagement with our technology supplier continues, and I think they've done the first 2 levels of testing, and I believe that they're going to do the third one sometime post the summer holidays in Europe. So we hope to get some feedback. So far, it's been positive in the right direction, as we had hoped for. And I think in September we should have a fairly clear plan on what we will do with the KTMS and also the conversion ratios. This testing is all a part of that endeavor. So I think we'll probably have a better update for you, on our next call. In the interim, the SOP volumes, whatever we had in stock, I think we're successfully getting it sold, both domestically and export has started as well. So I think we're happy about that. The domestic market actually we found a good market in the domestic market.
And in this testing, is the improvement significantly better than the existing harvesting technique which we use?
We do expect significantly better conversion ratios, yes.
But KTMS we have to still produce, right? Conversion is more of a plant you are telling, or the salt itself?
The plant. KTMS we already have what we have in stock as well. So I think the KTMS is not the immediate concern at the moment. We would like to see how to get the ratio on the conversion sorted out first.
Fair enough. Thanks, Ranjit, for answering all my questions. And
Thank you.
success for the coming quarters.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone. We have a next question from the line of Krishan Parwani from JM Financial. Please go ahead.
Yeah, hi. Thank you for taking my question. I have like 2-3 clarifications. So, firstly on bromine, I think you are kind of were able to hold on to the $4 per kg guided price range. So just on the volume front, do you kind of see FY22 kind of a sales volume in FY24, or would that be too aggressive of a number?
I think given the domestic demand as well as the export market coming back, I think we are confident of holding to the guidance that we've given. But I think it's still early days a bit. But at the moment, we don't see any specific reason to have to change it.
Okay, got it. Thanks for that. On the for the flame retardants side, I think since 90% of our volume is going to be contracted, was it on a customer's request that we have delayed the flame retardants plant to, let's say, the first half of 25 from the second half of 24?
No, I don't believe so. I think you have to keep in mind that being an integrated manufacturer like the likes of, you have the overseas players like Albemarle or ICL, right? I think that advantage always remains. So it's a question of just pricing, but at even at a very conservative price, I think the demand still is there as well as the margin can still be held. So we have not done any deference. I think we've always said that the capex is going to go at one time, and the commissioning, is going to happen in 2 phases. First, we'll have the clear brine fluid and the PTA synthesis and the other allied products, and then the flame retardants. Flame retardants are slightly more technical products. So, in terms of customer, evaluation, etc., there's a little bit more time that happens. So it's not just about competing on price.
Understood. And lastly, on the phase 1 of your, let's say, the derivatives project, what kind of a utilization you expect from, let's say, the clear brine fluids or PTA synthesis catalysts in this current fiscal year?
I think the first year we have set ourselves up to target about 70% utilization, because as I just said a few minutes earlier on earlier questions, post Diwali we will start aggressively marketing the products. So we should have all the tie-ups done. So we'll have a better visibility, to be able to get that utilization rate going at 70% in the first year.
Okay, that's great. And just the last bit from my side, on the margin front, do you expect to see an uptick despite, let's say, the aggressive marketing from the second half? So, whatever, let's say, margin that you have done in the first quarter, let's say 39% deducting the other income, do you expect to see the margin going upwards from here on?
I think 39% is pretty good. So, obviously any higher margin will be welcome. But I think we've always said that, this 37 to 42, that's the space that we are happy to look at as a margin, and I think that's what we're holding on. And I think we're holding on, mid-range, possibly the upper range of that. But that's ideally where we would like to be, no matter, what we have to do.
Got it. Thank you for answering my questions, and all the best for the coming quarters. Thank you.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. Thank you for the opportunity. Few clarifications from the capacity that you are adding and the expansions which are coming in. So from the presentation, we are adding about 32,000 ton capacity in the bromine side, and the derivative side is about 28,000 tons. So is it first of all fair to assume that the incremental bromine capacity is largely pegged to the bromine derivatives? That's the first question. My second question is, so incremental volume in bromine will be about 4,000-5,000 tons versus whatever we are doing, about 21,000 tons. Then on the derivative side, we mentioned that the brine fluid capacity will come from quarter four of this year. I didn't understand when the flame retardant capacity will come. And both these capacities to hit 100% utilization, will it be FY26? Is the other question.
I'm going to attempt answering all the questions, and if need be, please help me with repeating a question if I don't get to answer it. So the first one, I think, is that, yes, your observation is correct. A large part of the expansion will go into our captive use and the downstream facility. So that is what will happen. So you're right in that observation. The second one is, I think, on the commissioning of the flame retardant, that will happen. Conservatively, we will try to, get it done in the first quarter of FY25. However, as I said, our capex is going in for all of them at one time. So on an aggressive basis, we will see if we can commission it in FY24 itself. But that I would say is a touch and go on the flame retardant.
On the full capacity utilization of bromine derivatives, do you think it is FY26, considering whatever approvals, product, etc., that you need to get in place?
Yes, 25 end, we anticipate it should happen.
Okay. And lastly, sir, on the bromine derivatives, on the bromine side, what's the 32,000 ton capacity that you're adding? What is your capacity in the system then?
Sorry, Ashish, can you just clarify that question? How do you mean capacity in the system?
What is your capacity in bromine after this 32,000 ton capacity that you're adding?
Understood. Okay. It is 42,000 and change.
42. So you had 10,000, which is going to 42.
Right.
And you are doing 20,000 ton already, kind of a number.
Right.
So then the bromine needed for the derivatives, there will be more capacity expansion in bromine, because bromine derivatives, you're adding 28,000 tons.
So the 28,000 tons of bromine derivatives don't necessarily consume 28,000 tons of bromine. It will be not necessarily a linear ratio of 1:1.
Okay.
It could anywhere range between 0.2 tons of bromine for a product to up to 0.9 tons of bromine to a product. So the product mix will determine how much bromine will go.
But the larger part of the incremental bromine is meant for bromine derivatives only?
Yes. Largely, yes.
Largely, yes. Okay. Thank you. I'll come back for more questions if I have them.
Thank you.
Thank you. We have our next question from the line of Viral Shah from IIFL Securities. Please go ahead.
Yeah. Hi, sir. I just have one question. Can you please provide revenue split for 1Q FY23?
Revenue split for what?
Yeah, segment-wise, revenue split for 1Q FY23, that is last quarter. Same quarter
last year.
Yeah.
Okay.
Yeah, the salt has contributed around 1,960 million, and bromine 2,038 million.
2,038 million. Okay. Yeah, thank you.
Thank you. We have our next question from the line of Shantanu from IRS. Please go ahead.
Yeah, thank you. Hi, Ranjit. Ranjit, you spoke about the China market. Can you give us a sense of where the India market is, both in terms of the bromine pricing because it sort of lags the China market, and also in terms of the domestic demand on bromine. That's question number one. The question number two is, insofar as China is concerned, do you see any supply side uptick both on the bromine and industrial salt from the China producers?
Thanks, Shantanu. I think if I understood the first question, you're asking about the pricing in India and China on bromine?
Yeah, how is the India pricing tracking based on where the China bromine pricing is? Do you think there's a lag, or is it tracking exactly as China? So if China is bottomed out, do you think that India is also bottomed out on the bromine pricing for the domestic market?
Yeah, so I think that happened in the last couple of quarters. I think the Chinese price obviously, has come down faster simply because it rose much faster. And I think now they're finding pretty much a balance between the two. So, and we're seeing that.
So there's no significant difference in China and India pricing in the spot market?
At the moment, no. There's not any real difference. I think it just comes down to certain customers, how you price it with them vis-a-vis export.
And how do you see the demand, the domestic demand?
The domestic demand, I think, is good. Like I said earlier, I think it's pretty firm. I think the ag chem guys and the pharma guys are fairly more resilient. And I think there are certain companies that are having product portfolio differences between each other. So there are certain ones that are doing better than some. But I think overall it's still firm.
Thank you. And the second part of the question is, insofar as China is concerned, have you seen any supply uptick from the domestic producers of bromine or salt?
Nothing significant. I mean, I'm going by the fact that our business, continues quite firm on the salt side. Bromine, of course, I think summer always is where, the small domestic producers in China do a little bit more. It's warmer, so they can produce a bit more, but nothing out of the ordinary.
Okay, thank you.
Thank you.
Thank you. We have our next question from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So my questions are on bromine derivatives. So in clear brine fluids, you have mentioned that the technology tie-up includes 90% offtake from the Chinese technology provider. So here, are we going in a cost-plus basis model, or how the pricing of the product is done for this? Thank you.
Hi, Rohit. Rajiv here. So just to clarify, our 90% offtake is for flame retardant, not clear brine fluid. Clear brine fluid, we are actually doing the project with our own R&D inputs. And also the marketing of clear brine fluid will not be on the cost plus model.
Sure. Unfortunately, I think in the presentation on 19 number slide, it is mentioned in clear brine fluids column. So I don't know, maybe it might be...
Maybe it's an alignment issue, but the 90% offtake is on flame retardant side.
Right, got it. And second question is again on the PTA synthesis catalyst. So as of now, is it a replacement for the existing catalyst, or how does it work? So I understand that existing PTA players must be using some catalyst. So our bromine catalyst will be a replacement of it, or we will have to go in for only the newer capacities which are coming in to market this catalyst? Thank you.
So essentially it is not a replacement. The catalyst which we will be making will be from virgin bromine. Generally, a lot of manufacturers make it from the recovered bromine. So the PTA catalyst that we are attempting to will have a good demand, and we, like our MD said, we are already starting to reach out to potential customers, and that marketing activity will pick up pace from Diwali onwards.
Right. So we will be displacing some of the existing players in terms of the quality of the product. Is that understanding right?
We'll see when it comes, but our PTA catalyst will be based on purity. Purity will be very high for it, for the product.
Right, sir. Got it. Thanks for answering the questions and best of luck.
Thank you. We have our next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah. Sir, one more clarification. So when these capacities come on stream fully and get utilized, what will be the bromine volume sold and what will be the bromine derivatives volume? So the bromine volume, which is about, let's say, 21,000 ton, give or take, whatever we see on the quarterly swing, what should be that number in FY26 and what should be the bromine derivatives number in FY26?
I think when all the plants are up and running and let's assume a 90% capacity utilization conservatively, I think we expect pure bromine to be anywhere between 25 to 28,000, and the bromine derivatives to consume anywhere between 13,000 to 16,000 tons.
Bromine derivatives to consume bromine of 13 to 15,000 tons, right?
Right.
Then what will be the derivatives volume itself? Because that includes a part of bromine, right? So your derivative capacity is 28. So we should take 90% of that 28 for about 25,000 ton of derivatives sold.
So Mr. Pritesh, actually we had answered this question in our previous earning call, but just to reiterate, Rajiv here, the capacity of our bromine derivative is 28,000. 28,000 of bromine derivative will require around 13 to 14,000 tons of bromine. And as and when we further increase the capacity of downstream, we'll have to expand our bromine capacity.
Okay, sir.
Thank you.
Yeah,
Thank you.
Yeah.
Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you, everyone, for joining us in this earnings call today. We appreciate your time and showing interest in our company. We look forward to meeting all of you over the next call. We wish you a happy Independence Day. Jai Hind.
Thank you, sir. On behalf of Archean Chemical Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.